as Iran's strike on Israel sparks fear of escalating conflict. Financial markets worldwide are bracing for heightened volatility as the specter of geopolitical turmoil looms large following Iran's unprecedented weekend strike on Israel. With uncertainty rife and tensions escalating, investors are nervously eyeing the potential for retaliatory actions that could send shockwaves through global markets. The situation comes at a delicate juncture, with investors already grappling with persistent concerns over inflation and the looming prospect of prolonged periods of higher interest rates. Against this backdrop, Iran's bold move to target Israel has amplified fears of a broader conflict, sending reverberations across financial markets. Analysts are sounding the alarm over the potential impact on oil prices, warning that a sustained surge beyond $100 a barrel could trigger a flight to safe haven assets such as treasuries, gold, and the dollar. The uncertainty surrounding the geopolitical landscape has only added to the market's unease, with questions swirling about the potential for further escalation and the implications for global stability. Iran's strike on Israel over the weekend has thrown the region into turmoil, prompting speculation about possible retaliatory measures and raising the stakes for all involved. Despite Iran's assertion that the matter could be considered concluded, doubts persist, exacerbated by reports that President Joe Biden assured Israeli Prime Minister Benjamin Netanyahu of U.S. support against any Israeli counterattack. The response of Israel, a key player in the Middle East, will be closely watched by investors, with market reactions likely to hinge on whether the situation escalates further. Patrick Armstrong, Chief Investment Officer at Plurimi Wealth LLP, highlighted investors' inclination towards safe haven assets during times of heightened geopolitical tension, but noted that a restrained response from Israel could present buying opportunities for risk assets at discounted prices. Market sentiment received an early jolt, with Bitcoin initially plunging nearly 9% in the aftermath of the attacks before staging a recovery and trading near the $64,000 mark on Sunday. Meanwhile, stock markets in Israel, Saudi Arabia, and Qatar experienced modest losses amid subdued trading activity. While Middle Eastern markets exhibited relative calm following Iran's attack, concerns linger about the broader repercussions on global energy markets. Emre Akakmak, a senior consultant at East Capital in Dubai, cautioned about secondary effects on oil and energy prices, potentially exacerbating the global inflation outlook. The spotlight is now firmly on the risk of a protracted strike and counterstrike cycle, with oil prices emerging as a critical barometer of market sentiment. Brent crude's surge of nearly 20% this year, crossing the $90 mark, underscores the market's anxieties over potential supply disruptions and heightened geopolitical tensions. Despite the conflict in the Middle East not yet impacting oil production, recent Red Sea attacks by Iran-backed Houthis have raised alarm bells about shipping disruptions. Traders fear that a widening conflict could imperil tanker shipments from the Persian Gulf through the strategically vital Strait of Hormuz, intensifying concerns about global energy supplies. As markets brace for further developments in the unfolding crisis, investors remain on high alert for any signs of escalation or de-escalation that could sway market sentiment in the days ahead, underscoring the precarious balance of geopolitical forces and their profound implications for global financial stability.